Welcome back to Smart Stock Sam, the channel where we cut through the noise and hand you the signals that actually matter. I'm Sam, and today we are diving deep into one of the most suppressed and most misunderstood stocks in the entire market right now. We are talking about BitMine Immersion Technologies, ticker BMNR. And before we go any further, I need to ask you something. What would you do if a company handed you a $12.6 billion war chest in digital assets, and then the stock started bleeding out anyway? Would you buy the dip blindly, or would you wait for one very specific signal that separates the patient winners from the impulsive bag holders? Today, we are stripping back the corporate curtain to look at the raw numbers, the institutional money trail, the Ethereum connection driving this entire story, a hidden dilution risk almost nobody is talking about, and a precise trade setup for the week ahead. So if you have ever looked at BMNR and thought, is this a generational gift or a falling knife that has not finished its descent, stay locked in, because the answer might genuinely surprise you. Now, to understand what we are truly dealing with here, let us talk about the sheer scale of this thing. BitMine has quietly accumulated over 5 million Ethereum tokens on its balance sheet. 5 million. That translates to a treasury worth approximately $12.6 billion. Think about that for a moment. Most companies your age have never seen $12.6 billion in their entire lifetime, and this company is sitting on it in crypto. On paper, this should be a fortress, a stock that institutional money floods into and never leaves. But here is the plot twist sending short-term traders running for the exits. The stock just closed at $18.88, down nearly 4% on the day. And worse, we are sitting a full 19% below the early May highs when BMNR was flirting with $31 a share. So how does a company with $12 billion in assets trade like it is in freefall? The answer lies in what BMNR has become and what it is no longer. BitMine has officially made the transition from a traditional miner to what we call a high-beta Ethereum proxy. What does that mean for you as an investor? It means this stock no longer trades on its own fundamentals in the short term. It trades on Ethereum. When Ethereum sneezes, BMNR catches a cold. When Ethereum stumbles and loses footing, BMNR falls off a cliff, and then some. The market is still processing this identity shift from miner to yield-bearing treasury. And right now, extreme skepticism is winning that argument loudly. But here is the question I want you to sit with. What happens to this stock when Ethereum finally finds its floor and begins to recover? Could BMNR be the single best leveraged vehicle to capture that upside on the entire NYSE? We will get to that. But first, we need to talk about the storm that is actively dragging this thing lower right now, because there are multiple headwinds stacking on top of each other simultaneously. BMNR is currently fighting a two-front war, and both fronts are genuinely ugly. Front number one, a regulatory filing, just hit the tape disclosing the potential resale of over 501,000 shares. Now let me be absolutely clear about what this is and what it is not. This is not the company issuing new shares and raising fresh capital. This is existing holders looking for the exit. But here is the brutal truth about market psychology. It does not matter what it technically is. The moment the market sees 500,000 shares potentially sitting in the queue waiting to hit the bid, it creates an invisible ceiling on the price. Buyers get cold feet. Nobody wants to step confidently in front of a potential wave of selling. So the stock gets suppressed and pinned, even if those shares never actually trade. It is the fear of the supply, not the supply itself, that does the real damage to price action. Front number two is something that Chairman Tom Lee himself has flagged publicly: an inverse correlation with crude oil prices. As oil rises, Ethereum tends to weaken due to energy cost dynamics rippling through the crypto ecosystem, and BMNR is caught directly in that crossfire. It is not a relationship you see every day in traditional equity markets, but in this new era of digital asset proxies, macro forces like global energy are bleeding directly into valuations. So you have share overhang pressure from the top, macro oil headwinds from the side, and Ethereum weakness pulling from below. That is a three-dimensional squeeze happening simultaneously. But here is the flip side, and this is genuinely where the story gets exciting. The structural tailwinds building underneath BMNR are absolutely enormous. We are talking about a preliminary inclusion in the Russell 3000 and potentially even the Russell 1000 index. Do you understand what that means in practical terms? It means index funds, passive, systematic, non-discretionary capital, would be forced to buy somewhere between 20 and 25% of the entire market cap. Not because an analyst fell in love with the story, not because a hedge fund manager made a big conviction call, because the rules of the index mandate it. That is mechanically generated demand, and it does not care about the current share overhang. On top of that, the Clarity Act is actively moving through the Senate, and if it passes, it begins to construct the regulatory moat that every institutional crypto investor has been waiting years for. The long-term foundation here is genuinely compelling. The short-term weather, however, is a very different story. Now let us talk about what is actually generating real revenue inside this company, because this is the part most casual investors completely miss. BitMine runs something called the Maven staking network, and this is the true engine of their entire valuation thesis. Out of their 5.28 million Ethereum tokens, 4.71 million are actively staked. That is an 89% utilization rate. This is not dead capital sitting in a cold wallet collecting digital dust. This is productive capital generating yield every single day. At a 2.8% annual yield, that staking activity generates roughly $289 million in annualized revenue. In traditional finance, we would call this a dividend machine. BitMine is essentially operating as a decentralized central bank, printing yield from its Ethereum reserves around the clock. And that revenue stream is precisely what has attracted the biggest institutional names on Wall Street. Let us talk about who is actually holding this stock, because this roster will either give you confidence or completely reframe how you see institutional risk appetite in the crypto space. We have 436 institutional owners in BMNR right now. This is not a Reddit meme stock. Vanguard is here. Morgan Stanley is here. BlackRock is here. Cathie Wood's ARK Investment Management has a seat at the table. Even Bank of America has disclosed a $17,860,000 exposure to this name. When the smart money is this heavily committed, it typically signals a durable long-term floor being built. These institutions are not watching the 5-minute chart. They are modeling the next 5 years. They see BMNR as the cleanest way to get leveraged Ethereum exposure on a regulated US exchange without the operational headaches of holding actual tokens in custody. The institutional thesis is clean and powerful, but the short-term technicals, they are an absolute mess. If you are a technical trader, what I am about to tell you is going to make you deeply uncomfortable. The consensus right now is a strong sell. The RSI is sitting at 49.18. Technically neutral, not yet oversold, which actually tells you the selling pressure has not been exhausted. But the real structural problem is the moving averages. BMNR is currently trading below its 5-day moving average, below its 50-day moving average, and below its 200-day moving average. In the language of momentum trading, that is a complete structural breakdown across every time frame. The MACD is on a sell signal. The trend is definitively down. And the entire burden of proof sits with the bulls right now to demonstrate that buying pressure can absorb the overhead supply before the floor gives way. Which brings us directly to the backbone of this entire trade, Ethereum itself. You simply cannot analyze BMNR in isolation. It is a high beta proxy, so the real question is not what BMNR is doing, it is what Ethereum is doing. And right now, Ethereum is testing a make-or-break critical support zone. The line in the sand is $2,108. If Ethereum loses that floor on meaningful volume, the next technical targets fall to $1,909 and potentially all the way down to $1,741. That would be catastrophic for BMNR. On the upside, For any meaningful recovery to begin, Ethereum needs to reclaim and hold the resistance cluster between $2,256 and $2,338. Until that happens, buying BMNR with real size is essentially betting on a miracle. ETH leads, BMNR follows. That is the operating reality of this name. So now you have to ask yourself, with all this selling pressure piling on, why are we not seeing the mother of all short squeezes? The short interest data completely upends that narrative. We have over 32 million shares shorted. Sounds dramatic on the surface, but look at the days to cover ratio. It sits at only 1.36. In plain English, the shorts can fully unwind their entire position in roughly 1 1/3 days of average trading volume. There is no trapped short here. There is no squeeze fuel building. A legitimate short squeeze requires bears who cannot exit without causing a violent, sustained price spike. At 1.36 days to cover, these bears can calmly walk right out the door, and that structurally eliminates one of the most powerful bullish catalysts that retail traders were hoping to see. We also see an off-exchange ratio of 36%, pointing to significant dark pool activity, where large institutions are almost certainly hedging their long positions quietly, which keeps volatility elevated but squeeze potential structurally suppressed. And speaking of the disconnect between retail hope and institutional reality, the options market is screaming this divergence loud and clear. On the BMNR options chain, 73.25% of the volume is sitting on the call side. Retail traders are flooding into calls, betting on a sharp V-shaped recovery. Meanwhile, on Ethereum itself, the institutional put-to-call ratio is sitting at 1.15. The professionals are buying insurance against further downside. They have identified $2,100 as the max pain zone. Retail is trying to catch the falling knife with their bare hands, while the pros are bracing for the full impact. This kind of divergence almost always resolves in the same predictable direction. Retail gets shaken out and liquidated before the true bottom is confirmed, and then the recovery begins without them on board. So let us get surgical about the actual price levels that matter. Current price, $18.88. Immediate overhead resistance, $19.50. Major resistance above that, $21.20. Primary support on the downside sits at $18.50. If that level fails on a confirmed daily close, the next meaningful area of potential support does not appear until around $16 even. There is a significant gap. There is air underneath. And falling into that gap without a stop loss in place is exactly how traders turn a manageable, controlled loss into a catastrophic account blowup. Mark these levels on your chart right now. 1950 resistance, 2120 major resistance, 1850 primary support, and $16 as the abyss. For the short trading week ahead following Memorial Day, here is the specific setup. A cautious entry can be considered between $18.50 and $18.80. But this one condition is completely non-negotiable. Ethereum must be showing confirmed stabilization above $2,050 at the time of your entry. Not bouncing, not attempting, stabilizing with conviction. If ETH holds that zone, the upside target range for BMNR is $21.20 to $23 even, offering a risk-to-reward ratio worth seriously considering. But you absolutely must use a hard stop loss set at a confirmed daily close below $18.30. A confirmed close below that level signals the consolidative floor has shattered, the thesis is invalidated, and you exit cleanly. No ego, no hope, no averaging down, just pure discipline. Think of BMNR right now as a battle between two powerful opposing forces. On one side, the floor, that $12.6 billion asset base, the $289 million in annual staking revenue, and the imminent Russell Index inclusion that would mechanically force institutional capital in. That is your long-term safety net and the structural bull case. On the other side, the gravity, the 501,000 share resale overhang, the bearish Ethereum technicals threatening a breakdown below 2,100, and a $3.82 billion accounting loss painting the narrative dark. Right now, gravity is winning the arm wrestle. We are sitting at the uncomfortable intersection of extreme near-term volatility, completely suppressing a powerful long-term value thesis, and that makes this one of the more nuanced and dangerous short-term entries in the entire market right now. So what is the final verdict? Wait and react. Do not be the hero who steps in front of a freight train to prove a point about long-term value. Let $18.50 prove itself as real support with confirmed price action. Let Ethereum demonstrate it can hold above $2,050 with conviction. And if the Russell Index inclusion hits and the regulatory tailwinds accelerate, you will have more than enough time and more than enough upside runway to catch the move with appropriate sizing. The Treasury is not going anywhere. The 5 million Ethereum tokens are not evaporating overnight. Your opportunity does not expire with tonight's closing bell. Before we wrap this up, I need to be completely transparent with you. Nothing you have heard today constitutes financial or investment advice. This analysis is strictly for educational and informational purposes only, current as of May 23, 2026. Digital asset proxies carry significant and unique risks, including extreme volatility, regulatory uncertainty, and the very real potential for total capital loss. BMNR is not a stable or conservative investment. Always do your own due diligence. Size your positions according to your personal risk tolerance and financial situation, and consult a licensed financial professional before making any investment decisions. Past performance of any stock, including this one, is never a guarantee of future results. All right, Smart Stock Sam family. That is the full breakdown on BMNR. Now I want to hear from you in the comments, and I want you to really think about this before you answer. Do you believe that Ethereum staking yield alone is a sustainable enough business model to justify BMNR's current valuation? Or does this entire story ultimately live and die on raw ETH price appreciation? Drop your honest answer below because I read every single comment, and this conversation genuinely matters. If this video gave you even one actionable insight today, smash that like button right now. It takes 2 seconds and it means the world to this channel. If you are not already subscribed, hit subscribe and ring that notification bell so you never miss a setup like this. We drop deep dive analysis every single week. And if you want to go above and beyond in supporting Smart Stock Sam, YouTube has a feature called Super Thanks. You will find it right below this video. It is the single most direct way to support the work we do here. Help us go deeper on every analysis and keep this whole community growing strong. Every super thanks genuinely makes a real difference. Until next time, stay sharp, stay disciplined, and I will see you in the next one.